What's up guys, Ramsay Rippers from Kane Capital here, back with the second video of my YouTube series, So You'll Want to Trade. Today we're going to be talking about supply and demand. I'm going to tell you guys what supply and demand is, how to trade with it, and a few trading recaps from the past. So without further ado, let's get right into it. So before we get started on supply and demand, it's important to note the structure of the market and that price goes through following phases. Those phases can be described as uptrends and downtrends, accumulation and reaccumulation, and distribution and redistribution. Now we'll get into the laws of supply and demand trading. So all financial markets work on the universal law of supply and demand. So the laws of demand implicate that the higher the price of an item, the fewer the demand. So buyers don't want to buy at a higher price, right? And the lower the price, the higher the demand, because buyers want to buy at lower prices. And the law of supply being the higher the price, the higher the supply. Sellers want to sell at a higher price, right? And the lower the price, the lower the supply. Sellers don't want to supply at those lower prices. When we get into what exactly a supply and demand zone is, it's pretty simple. I like to not overcomplicate things. So basically, a supply zone is a potential rejection region where sellers are located, and demand zones, on the other hand, potential bounce regions where buyers are located. So if you look at the chart that we have up here, this is actually the Disney daily chart. I have three zones. Two of them are supply zones, one of them is a demand zone. To not overcomplicate things, supply zones are rejection regions, demand zones are bounce regions. You can kind of note that the red zones up top are our supply regions and the green one on the bottom is our demand zone. So basically, it's just an area of support or resistance. Now, something that I like to see and how I like to trade off of these zones, or with respect to whether I'm taking puts off of a supply zone or calls off of a demand zone, sometimes I also like to see these zones break and flip, right? So a lot of times, traders, as a day trader, we look to see if a previous support breaks and flips to new resistance, right? Like a break, hook, and go. If we break support, if we retest it from the downside and it rejects, now it flips to new resistance, I would like to take puts off that level. I like to do the exact same thing with demand zones. It just kind of gives me a little bit more range, a little bit more price action and room on the chart to take these trades. An example of what I was just previously talking about on how I like to see, as a day trader, previous support flip to new resistance, or previous resistance flip to new support. Now, that exact same theory and strategy, that mindset, follow suit with supply and demand zone. So now, as we can see, I have in gray a demand zone on the hourly chart of SPY charted here. Areas on the chart where price bounces, where buyers are present. We can clearly see that this area around 402 to 403 on SPY, there is clear demand, right? These prices are closing over this demand zone. They are bouncing off this level. I would like to see if we can get a close or a break under this zone and a retest if it flips to supply. And that's exactly what happened on this gap down, right? So the following day, on where the blue circle is highlighted, you can see that SPY gaps down to about like 4025 and bounces right up to that previous demand zone, which just so happens to be high a day, and then immediately rejects, running almost 8 points intraday. Incredible move right off of that old demand zone, right? Now new supply, right? That demand flipped to supply. We got that break below it, retest, rejected. That's now our new supply zone. A lot of times you can look to base trades off of previous zones when they break to the upside or downside. Look for retests and continuation, which is exactly what happened right here. I like to look for these setups quite often. All right, so here is another trading example of me using a demand zone bounce to add SPY calls. Now, just below that previous example, as you can see on this chart, is another demand zone on SPY right around 393, dating back to middle of January. We bounced again off of it right around February 24th at the chart. If you can take a look at the chart on the bottom, the time frame. And on the specific day, March 1st, we retested that 393 zone where I looked to add SPY 394 calls at $95 a contract on this, I meant to say hourly support, this hourly demand. So how I like to play these is basically high risk to reward plays with a stop loss on a candle close right below this zone. So this is a great risk to reward spot, right? We're adding at demand. If it bounces, great. If it bounces, we're gonna have a winning trade. If it doesn't, and right when the candle closes below my zone and cracks, I'm out. Quick paper cut, quick loss. On the other hand, the risk to the upside, far greater than the risk to the downside, right? It's probably like a 3, sometimes 4 to 1 risk to reward ratio when playing these zones with such a quick stop loss. So now on that exact same chart, I'm gonna go into the 5 minute. This is the exact same chart, that exact same zone, but this is what it looked like on the 5 minute, right? So I added those SPY 394 calls at the bottom of that demand zone. We bounced, took a little bit off of the initial bounce at 126, which is about what is that, 25? It's about 30%. And ended up exiting right at this resistance level I had on the chart. I can't remember exactly what level it was, but I exited for 100% gain. And just like that, in what, 5, 10, 15, 20, 25, 30 minutes, 100% ripper off of a demand zone. The exact same thing works with supply, right? But once again, it's important to note having a plan going into the trade. So if you're adding off a demand, what's your stop? For me, my stop is a close and a clear break and close of a candle below that zone. Once again, it offers just a really nice risk reward to the upside. So this is the example of taking a trade using supply and demand. In this case, it was demand. All right, guys, so that's going to do it for today's video, episode 2 on So You Want to Trade based off of supply and demand. Hope you guys enjoyed. If you did, please remember to leave a like, comment, and subscribe to the channel. It really helps a lot and goes a long way. We got a 7-day free trial going on in the Kane Capital Discord, rolling 7-day free trial. If you want to check it out, check out any of my trades or the rest of these 6 guys in total. And if you have any other suggestions on videos to do in the future, remember to leave those in the comments. So hope you guys have a great week. Catch you next week on episode 3.